and then subsequently continues down, pushes down, come harvest more liquidity and come down to a more priced area. So essentially the demand level, or the low, the low caused in the New York opening hour, essentially is a trap and gets swept out here. So yeah, there's a little bit more detail to touch on when it comes to this New York session. This is another good example here by the looks of it. The New York session pushes to take liquidity, and then you can see as soon as the session, the first hour of the session ends, that's when the algo initiates its next price movement, which is to continue down, trapping demand zones and levels caused by this opening push. So, you can see how this is sort of very important intraday feature to look at, especially around the New York session. And if you trade New York, it's definitely very important to look at. So in terms of the timings, there's sort of, there's two parts you can look at it. So obviously you have the first hour of the session. The important things to look at is where it opens and where it closes. So just like here, we can see that we open here and we see we close here. So, likely what happens is the fake move will come from where it opens, and then the real move will come from where it closes. So then we can continue down like this. So say this is where the fake move opens at 1 o'clock, and then at the end of the first hour, so 2 o'clock, that's when the real move is then initiated. And you can sort of likely be a trader in here, anticipating this level to be taken out and continuing with your sort of higher time frame analysis. So potentially in this example, your higher time frame analysis was to take out this low. Not nice liquidity that exists underneath here, and obviously price then eventually delivers there. Same as sort of these examples up here too. We've now sort of built relative lows here, which eventually, if you were a seller within here somewhere or here, price eventually comes and takes these out and maybe comes to your higher time frame points, such as these relative equal lows down here. So, the sort of New York session and the characteristics around it in terms of the fake sort of trap that it can leave behind, and the 1 and 2 p.m. opening price, and very, very important to sort of look at if you're trading intraday. Definitely something to sort of make a note of and study and get into. But that's about all for the New York session. So now we've covered New York, London, Frankfurt, and Asia. So we sort of covered all the key important session characteristics, and sort of what we're going to be covering. Next, we're going to be getting onto cycles, so the daily and weekly cycles. So all the information we've learned about sessions can be put together into what we know as the daily cycle, and then we're also going to get onto the weekly cycle as well, and then sort of get onto more sort of price action evolved sort of analysis, really, rather than sort of looking at sessions. Like, yeah, we've also managed to drop some gems about liquidity and stuff whilst talking about this, but this is mainly just been focused around sessions. We haven't really got the opportunity to sort of jump straight in and talk about liquidity and price action and sort of pivot points and entry types and all this other stuff, but that's all going to start coming now. So cycles, get onto sort of algo structure, liquidity, IPA, mitigations, traps, entry models, stuff like that. So yeah, let's get onto it. Right, cool. So we're going to start talking about the daily cycle now. So there's quite a few important sort of things to know about the daily cycle. What we're going to do first is just bullet point out the sort of key points to it, and then we're going to sort of look at some sort of diagrams and also some chart examples too. So daily cycle. So the daily cycle takes into account each of the session characteristics. So Asia, Frankfurt, London, and New York. And the daily cycle is essentially when they all play hand in hand with each other. So I'm going to draw up sort of just say like an example of a particular daily cycle. So cool. So let's just have a look at this particular price action. So over here we have the Asia range. Just make that purple. Then we have the Frankfurt range, and that pink. Then we have the London Open, and then we also have the New York session. So, what are the sort of characteristics to this daily cycle? So this particular example would be the bearish daily cycle. So, what happens? We have Asia liquidity taken. We have Frankfurt liquidity taken. So, both Asia and Frankfurt essentially get manipulated. We have the London session forming the protected high of the day. Obviously, in a bearish example, would expect London to create the daily high. And if we had a bullish bias, would expect London to create the daily low. So this high is protected throughout the day. And then we have the New York session, which leaves behind a trap level, which then it gets taken out. Price comes to mitigate this level here, and we continue down, completing our sort of daily, bearish sort of bias, potentially sort of delivering to a daily sort of liquidity target, which we was expecting price to take out for the day. So the daily cycle is essentially all the sessions sort of playing hand in hand with each other. We may as well talk about it whilst we're here, but many times the New York session opening price will sort of be, act as inducement. So there could be sort of post New York continuation trades, which could potentially be taken here. And with a bearish bias, the way you can sort of play the daily cycle, these are the sort of the entries you want to keep an eye out for. So the first one would be the sell at London Open. So this would be sort of either above the Asia high or above the Frankfurt high. It depends on this is sort of how it's laid out. So say it could look something like this maybe. So the Frankfurt high hasn't taken out Asia high. They just sort of get cleared together. You could take a sell in here. You could have to sort of make it more high probability, you're likely going to have some sort of higher time frame level, some sort of higher time frame liquidity. So potentially something that looks like this. So like that. So you have this nice higher time frame level, some sort of mitigation. We have the Asia liquidity. We've got price building liquidity. Your first sort of particular entry you could be looking for on a bearish bias would be the sell here. Then you have a sort of continuation sell, which could be say off of like a breaker block, or say within this price action here, this sort of London price action. If price sort of creates some algo structure, takes liquidity, we could be looking to get involved sort of along the way down. But we're going to get onto sort of algo structure later on. And then we have this sort of sell here, which is above the New York trap being taken out. So these are sort of the potential entries. Sometimes you can also get sort of like a hedged buy. So after sort of like Asia liquidity has been taken, you could get a hedged buy here. Maybe price would want to come and harvest more liquidity before coming down. So you could get sort of like a variation like this, and then this becomes the New York trap, and price continues down after taking this high. There's multiple, it's essentially like a snowflake cycle. It's going to look different day to day, and it's also not going to be perfect every single day. But the sort of key thing to pay attention to is the most common points. So the Asia liquidity, Frankfurt liquidity, as well as Frankfurt opening price. So you can see sort of in the drawing here, if we mark up Frankfurt opening price, lines up perfectly with the sell opportunity here above the New York trap level. Then we have London session creating the high or low of the day, and New York causing a trap. So the daily cycle works hand in hand with all the session characteristics. It's fractal, it's a snowflake pattern. It's not going to be perfect every single time, but you need to just follow sort of main characteristics. And vice versa for a bullish scenario, it's going to be the exact same where we have the Asia range, we have some sort of liquidation of Asia or Frankfurt. London forms the protected daily low. New York sort of can create a trap zone like this, say, and we continue to push up and take it out. So yeah, just like in this example here, maybe New York opened here, so this could be the trap. So this push up is the trap. So you can then sell at the end of New York session, and then this is the trap caused here, and we continue down and take liquidity. So it's quite important to sort of pay attention to the daily cycle. It can really help, completely just disregarding high time frame bias and liquidity imbalance and rebalance, and other sort of algo structure, other factors of the market which we use. You can really get a good idea of sort of where the high probability areas are to sort of position yourselves, and then within these levels you can then look for the the lower time frame confirmation of say this higher time frame level up here where we've took out higher time frame liquidity. We've taken out session Asia liquidity. It's London open mitigation, so we could expect this to be sort of the high of the day. You can get your sort of manipulation set up, coming down to sort of target liquidity. So from here onwards is where you'd look for your entry criteria within these levels, which we're going to get onto all sort of entry criteria stuff later. But this is a sort of very good gauge to sort of get an idea of where the actual entries in a sort of typical daily cycle are likely to be, where where the sort of best places to be involved in the market, where you're at sort of fair, good quality pricing levels which are likely to hold throughout the day as swing points or hard time frame points. So yeah, that's it for the daily cycle. Take notes on it, study it, study every single day. It happens a lot. You can actually see sort of this example here where we have the Asia range, we have Frankfurt liquidity taken. London here forms the high of the day, so you have sell opportunities at London high, and then New York causes this trap level, so you could potentially have buy opportunities here to take out the New York trap, and then we may sort of see further sells, still under the sort of belief that this high here is going to be the protected high of the day. So say a level like this, which has a bunch of liquidity here, could potentially act as a potential sell zone. In this scenario, it looks like it doesn't play out, but that's because this analysis is completely irresponsible of the high time frame bias. So that's just sort of an example of how the daily cycle can sort of play out quite fractal as well. It's always important to understand this. It can be different on a daily basis and not 100%, but they're the sort of key points you need to pay attention to get positioned in the market. So yeah, that's cool. Let's get on to the weekly cycle next. So next we're going to be talking about the weekly cycle. So obviously the weekly cycle comes in two forms, for a bullish week and for a bearish week. They're slightly similar, so we're going to start talking about the bearish week first, and the sort of characteristics behind each day, Monday through to Friday, and what we can sort of anticipate each day to move like, and how we can sort of form an understanding of sort of a typical week of price action. So have a look at the chart, shall we? Oh, let's get ready. Cool. So, right, we have an example here on EU. The 5 different colors break down the 5 different days of the week, obviously. So Monday, Tuesday, Wednesday, Thursday, Friday. And obviously it's clear this is a bearish week of price action. So to start off with Monday, Monday is, it's usually going to be the sort of lowest momentum day of the week compared to Tuesday, Wednesday, Thursday, and Friday. This is usually because the market being closed over the weekend, the sort of liquidity at the start of the week is always lowest due to traders sort of closing out positions on Friday from the previous week. So Monday always starts with the lowest liquidity. So it's often Monday will sort of typically range price action in a bearish week. we'll get sort of just liquidity being built up. And this sort of feeds perfectly in with how Tuesday operates, since Tuesday is usually the sort of manipulation day. So, Tuesday is where the sort of early manipulation of the week occurs. So in this case, we are expecting a bearish week. So, the sort of opening price of Tuesday is going to look to take liquidity. Most of the time, this comes in the form of, clearing out the Monday range. And, in this example, we can see we've cleared out this liquidity level here, which looks to be sort of like a 1 hour high. And we've came to mitigate a level up here, this nice range here. So I'm just going to mark this. So Tuesday has came and sort of manipulated early on. This is with the purpose just to take liquidity, to sort of begin fueling the move or the direction for the week. So yeah, the key characteristic to take from that is, Tuesday is likely to be the manipulation move, and this will also likely form the high of the week. So in this case, you can see we have a nice rejection candle here. No candle body closes above this liquidity point, so we can confirm a strong rejection. And this high here is the protected high of the week. Price obeys this level throughout the week. And yeah, so essentially Tuesday has sort of taken Monday liquidity, taken liquidity from the previous week. That's a very important characteristic of Tuesday too. It'll always sort of look to take liquidity from the previous week where possible too, to then continue and sort of fuel the beginning of the weekly direction. And in this example here, Monday's low would become the sort of next break structure or next draw of liquidity to come, and for price to sort of continue delivering bearish. So that's Tuesday. So next we're going to talk about Wednesday and Thursday. So we may see some sort of acute. So after this Tuesday move here, we'll see some sort of push into the sort of chosen direction. So obviously we start to go bearish. Wednesday is typically the day which will confirm this movement. So sort of at the end of Tuesday, maybe the beginning of Wednesday, you may get a small sort of like a redistribution of price. So, a small build of liquidity, some sort of manipulation, and then a continue down. So Wednesday will typically sort of be that continuation move to Tuesday. So, Monday is sort of a range. Tuesday is the sort of manipulation move, and Wednesday is the continuation of that Tuesday manipulation move. Which, in this case, you can see Wednesday given a nice push down, taken out Monday's low. And now Monday's low has been taken out. This confirms the bearish week. And obviously, you need to use higher time frame and stuff to sort of get an understanding of what you want the week to do, really. So obviously, from this 1 hour chart, we can see that this chart is bearish currently. And without looking into too much detail, but perhaps you wanted price to continue down, take out some liquidity, and you was expecting a bearish week, then you'd expect this sort of similar weekly structure to play out day by day. So now Wednesday has sort of completed a nice bearish continuation and started that sort of nice push, that nice movement down. We'll get a sort of similar situation occur where price will sort of reaccumulate orders, and then Thursday usually has large momentum. So just like how Tuesday has high momentum to cause the manipulation move, Thursday will also typically usually have high momentum and carry sort of continue down into that bearish direction. However, it will also typically sort of generate and induce more orders into the market. So we can see how, after we've had a grab of liquidity, we've had a nice push down on Wednesday. We've then sort of began to have a pullback, and between the sort of overlap between Wednesday and Thursday, orders have been generated. Thursday has continued down, continued to break structure, built more liquidity, and built future liquidity above these highs too. And then coming to Friday is obviously the last day of the week. Friday will typically put in the low of the week. You can see how at the open of Friday, this low here becomes the sort of protected low of the week, and Friday would, it's likely to sort of, especially after Wednesday and Thursday, sort of continue with a nice bearish direction. Friday is likely to sort of reverse price. So in this example, obviously accumulate and begin to push up, so sort of cause a pullback. Generally to finish the week off in a sort of well-priced area. Looks like price wants to come and sort of take out liquidity that existed in here and fill in some sort of imbalance in this level. So, price is sort of ending up, at a well-priced level, meaning that for the week start, Monday, for the next week, it can sort of start in a good position where you could see your range, and then Tuesday may sort of come to take liquidity again. And then we have that Wednesday continuation, accumulate again, Thursday continuation, and then Friday finishing off again. So it's all sort of feeds into each other. And within the weekly cycle, obviously you can expect to see the daily cycle, which we spoke about earlier. So for example, London high forming the protected high of the day. London open here forming the protected high of the day. Once again, London in here forming the high of the day, and between 8 and 9, so this low here forming the sort of protected high of the day, or protected low of the day in this case. Same with sort of Asia liquidity. You can see the Asia range here building liquidity and it being taken out, taken, as well as then like sort of Frankfurt liquidity, and then also the New York sort of characteristics we spoke about earlier on too. So you can see how everything sort of falls within each other. So the daily cycle is like a bigger picture, or the weekly cycle is a bigger picture, and the daily cycle sort of feeds in for each day within the weekly cycle. So you can get a good bias for the week as well as a good bias for the day and sort of day's direction if you put the two together. And this is just sort of without even looking at higher time frame analysis, top down analysis, and sort of looking at the market's higher time frame intention based upon liquidity and imbalance. So these are sort of things we're going to get talking about later on. So yeah, cool. So this is a good example of the bearish week. We're now going to cover a bullish example. Cool. So let's talk about a bullish example of the weekly cycle. So got a nice example here on the chart. So let's break it down into its characteristics. So it's slightly different to a bearish week. So just like on the bearish week, obviously on a Monday, the market sort of starts off in a liquidity deficit, which, as we explained earlier, that means the market, is low on liquidity. Typically, we'll need to sort of harvest some liquidity to sort of fuel the beginning of the week and to begin to establish the weekly direction. So, Monday's going to sort of have fairly low price movement. It's not going to go crazy. It ain't going to be like Thursday, etc., Thursday and Friday, where we have these big expansion moves. However, on a bullish week, we could expect Monday to take liquidity to sort of gather, capital to sort of move the market at the beginning of the week. So expect some type of draw on liquidity on Monday. In this example, you can see we have a nice draw on liquidity here. A very nice rejective candle, sort of confirming that as a draw on liquidity, and this low likely to be a protected low. So quite important about a bullish example is that Monday will typically create the low of the week. So in the bearish example, Tuesday had the manipulation move and will form the high of the week, whereas on a bullish example, Monday will sort of form the low of the week, and this low is protected for Tuesday, Wednesday, Thursday, and Friday. So the sort of main characteristics of Monday, it will sort of have fairly low momentum, filled liquidity on both sides, and it will like to take liquidity to sort of begin fueling the market for the next current days. We can see that Monday creates a very nice trap zone here. You can see there's a lot of liquidity above this high here, as well as sort of leaving nice liquidity in the form of a trend line over here. So looking at Tuesday, so just to start off, we can see we've had a nice money transfer which occurs inside of here. We're going to get on to talking about this sort of stuff deeper on throughout the bootcamp call. But we have a nice money transfer which occurs here. Monday is the protected low of the week. And so the characteristics of Tuesday is essentially going to establish the direction of the week. So, once we start to begin to break structure upwards above Monday's high, and sort of trade back into levels and continue up, this is Tuesday sort of establishing that the week is going to be bullish. So Tuesday is still going to be not crazy high momentum, but definitely higher than Monday usually. But it's essentially going to sort of accumulate liquidity and take it out, and begin to sort of move in the direction of the week's sort of bias, if that makes sense. We can see Tuesday here, generating liquidity, pushing up, breaking structure above Monday's high, taking liquidity, confirming that with a nice rejective candle, and beginning to move away, and continue that bullish structure to sort of break structure upwards again. Wednesday will typically have a lot higher momentum than Monday and Tuesday. Wednesday usually will build the highest amount of liquidity on both sides of the market. This is typically because Thursday will then have a manipulation move, which will usually have high momentum. So in this example, we can see Wednesday builds a lot of liquidity above both these news high and lows. So we have tons of orders above here, and a key thing to the algorithm, it likes to build liquidity on both sides of the market. It likes to liquidate one and trade towards the other. So just like we've seen many times with the Asia range, the sort of Frankfurt range getting taken, we're going to see it with the market maker buy to sell models, and as well as sort of in the weekly cycle as we talk about here. So we can see that Wednesday has generated large amounts of liquidity on both sides of the market. And Thursday is the manipulation move. So Thursday will manipulate either, a high or low of Wednesday. Obviously, because we're expecting a bullish week, we're expecting, we could expect the high to go. However, potentially Thursday could liquidate down and then continue up. But usually the manipulation move caused on Thursday will be bullish, a bullish move. So you're expecting a bullish week, and this feeds in well with what Friday does, since Friday will usually distribute and then reverse the market. So on Thursday, we expect that sort of manipulation, that bullish move, and you can see within this example, the sort of intention for Thursday to sort of inject a large amount of capital is obviously one, to take out Wednesday's high, but two, for this higher time frame liquidity level. You can see we have a nice draw on liquidity here. Price cleanly draws liquidity. We then start to shift and have that money transfer where the liquidity taken out above this high gets transferred from weak to strong hands. So the algorithm essentially captures the sort of weak traders who got liquidated here. That money is transferred from the weak traders into the hands of the algorithm here, and this high is sort of respected as the high in which the sort of transaction has occurred, where money has been sort of transferred between both parties, and then once this has happened, the algorithm is sort of happy to continue to re-inject the capital taken above this high into the market to push it into its next chosen direction, which leads perfectly on to Friday, which like we said, Friday will usually distribute the market and continue to the opposite direction of the bullish week, so essentially reverse the market. So you can see we have a nice distribution here. We come to respect the money transfer level up here, and price holds and continues down, with quite a lot of momentum reversing both Thursday, Thursday's liquidity, and the key level we talked about earlier, which was Wednesday's low. Just as we discussed, the market likes to build liquidity on both sides and then continue down to take it out in future time. So the week will sort of end there. Monday still being respected as the low of the week, and the week being bullish.